Good morning, everybody, and welcome to the Seiler Wealth Management video blog. I am Lee Seiler. The website is stockdoctor.com, stockdr.com. Check it out. A lot of great content on there. I'll talk about that in a little bit. But this morning in the headlines, Best Buy came out. They had revenues that topped analyst expectations, but guidance going forward doesn't look so great. So the stock is down, was down as much as 6% pre-market. It's going to be trading down about 4 or 5% pre-market. Look, Best Buy is an interesting company. First of all, I'm shocked that that place cannot make a lot of money, because if you've ever gone in there, there's nobody there to help you. So you got to know their labor costs are absolutely nothing, okay? But no, I'm serious when I say that. The place is just awful. I'd rather go to H.H. Gregg, pay more, and at least have somebody talk to you about the products. Anyway, Best Buy, ticker symbol BBY. The stock probably is not something I would own. It's done nothing in a very long time. It's basically even flatlined. If it was my EKG, I'd be dead by now. So Best Buy, I would probably sell it if you owned it. We don't own it. I haven't owned it in years. I made money with it years ago when it was good, but not since then. But I want to talk about, because the market has been really flat. In fact, the markets are down year to date again. And we had our fourth down week in a row in the Dow, although the S&P squeaked out a little bit of a gain. NASDAQ's been a struggle. But things have really just been questioned. Nobody's really sure which direction to go. And if you are being passively managed, meaning if you own just mutual funds, you're sitting on them and letting them ride no matter what, thick or thin, that's passively managed. And you're not really making any moves based on what you see changing economically. Look, that used to work. Okay, passively managed investing used to work. Okay, but it doesn't work today. The markets work way too fast. And I'm not saying be a trader, because no one needs to be a trader out there. Traders costs way too much to do a bunch of trades, and you're usually not very successful. But a little bit more activity in the portfolio, shifting some things, rebalancing some items in your portfolio, adding some sectors that you believe will do very well. Sectors are so important in your allocation of the portfolio. In fact, 83% of it, the reason a stock goes up, it's in the right industry group and subgroup. So this is a critical factor when you're trying to find out what ideas you want to put or investments in your portfolio. Now, I have a guest today at work. Where is she? Cal? Say hello. That's my dog, Callie. She's, I bring her to see her bone there. Yes, I bring her to work every once in a while, and she's a sweetheart. So today is Bring Your Dog to Work Day at Seiler Wealth Management. So anyway, the sectors are very important. And right now, my favorite sectors, you got to like energy, because energy is coming back into play. We own them. We've made a big move on it lately, and I think there's some opportunity there for individual stocks as well as exchange-traded funds if you want to broad-base energy exposure. That's a no-brainer. I can help you with that. And there's some things out there that I think could also pay you a little bit of dividends, because dividends are going to be critical in your portfolio. Because let's say the market only goes up 3-4% this year. It's very possible. I tend to think it's probably not going to go up much more than that by year's end, because we're still, for all intents and purposes, we're break even to down a little bit. So you have to go through the summer, which is not usually great. I mean, you'll get a summer rally probably, but so from that, between now and the end of the year, we go up 5%. That dividend can help you squeak out 7%. And that's a big number when you're looking at compounding your portfolio values, all right? And that's the key here, is long-term investing. In a short-term trading environment, it's tough. This is not right now a great short-term trading environment. So here's what you got to do. Let's take a look at things like, I told you last week, I see the biotechs and I see the drug stocks really starting to get frisky. They have been beaten up dramatically. And why were they beaten up? Well, because every presidential candidate was just piling on and saying how bad they were. But we know that this is a necessary evil. You need it, and they're still going to get their piece, all right? They're still going to make money. So they've been beat up 20, 30, 40%. And now, when the market's on the defensive and kind of pulling back, they're holding strong and not going down anymore. So those kind of things, when I look at, and I look at the macro part of the stock market. So I'm looking at what's going on sector-wise. I see how sectors improve. I see that, hey, while the market's going down, this particular sector, energy, is showing me really good relative strength. Relative strength is the individual strength of that sector and or stock as compared to a benchmark. The benchmark being the S&P 500. So if you're starting to see things kind of, hey, S&P's pulling back, but yet this sector like gold, got frisky. Gold had made a big move. I missed it. I didn't buy gold. I don't own it. I've never been really a gold bug. I have owned it in the past. I did not. I think I made a mistake on that one. I should have had it. But, let's take a look at something in that genre that got beat up 20%. Nobody wanted it. I mentioned it 2 weeks ago. Apple continues to go up. Yesterday was a down day. Apple was up. It's up again today. All the buzz is they're making a major launch in the iPhone 7. So this stock that got beaten up, and we picked stock up, and I own already a bunch. I mean, Apple's my largest position, and we own it. So as disclosure, I own it personally, and we own it 40, 50 points ago. However, I bought more in the low 90s, 90, 93. I think that's an absolute steal. I think it's a value here. I don't care what anybody says. If you listen to those guys, here's the problem now. When you listen to guys on TV, most of them do not manage money for a living. They can say whatever they want. I can't. I manage money for a living, so I can't say whatever I want. I disclose I own Apple. I like it. I think it's a value based on most matrices. All right, it's phenomenal. Now it's a little extended at 96. It's getting towards 97. I'd rather buy it back if it pulls back in 90, 92, 93. So let's go back to Best Buy. Best Buy they're just getting absolutely murdered. By whom? Amazon. Amazon's taking market share from all the retailers. Amazon Prime, unbelievable service. Now there's some of their products same day. How can Amazon get away with a high valuation and stock price, but yet they don't make any money? That's the million-dollar question. Nobody really knows. If you value Amazon like you would Walmart, it's not even close. Walmart is a great valuation compared to Amazon, or even Best Buy is a better valuation than Amazon. But Amazon has that component. They got the it factor. They're doing it all. The delivery, the Prime services, they have subscription services now. I mean, they're really doing it all. Now, eventually, that'll drop to the bottom line, but they continue to do research and development. They're still cutting edge. I mean, that's a company still in the cutting edge, in the forefront. I mean, after all these years, I remember when they went public 15 years ago. They're still doing some great things. So, what I want to do before I go, I want to let you know that on my Facebook, on the Silent Wealth Management Facebook, I've got some great articles. You can also find that on my website. A recent article talks about living trusts. So if you think you may need a trust, read the article. There's some advantages and disadvantages. Also, there's understanding, an article on my Facebook that we put up there, and it's also on my website, understanding the marginal tax brackets. A lot of people don't understand. You say, oh, I'm in the 28% tax bracket. Okay, I made $100,000, I owe $28,000. That's not how it works. It's over and above each bracket. So take a look at these articles. On my website, stockdr.com, has incredible resources. I'm really pleased and proud how it's turned out. So anyway, and I do have some cruises. I told you I'd get rid of 4 today. All right, I'm going to give out 4 this week. I'll give out 2 right now. And I appreciate you guys when you like, when you share. I put you in for my green basket, 4 cruise, for 2, the Bahamas. It costs you nothing except for port tax. I can't control that. That's what the government charges. It's $70 a person. The rest is free. All right. It's a pretty good cruise to Bahamas. A quick little weekend jet getaway. Let's go into the green bowl. If you share, you get 1 entry. 2 entries. If you like, you get 1. Here we go. And the winner is Walt K. Walt K. You are a winner. Winner chicken dinner. You will get. Sorry, Callie. I didn't mean to wake you up. My dog's sleeping. So you will get a cruise for 2 to the Bahamas. I'll get your information later. Let's go with Joanne D. Joanne D, you are a winner, and I know Joanne. So sorry, Callie, didn't mean that. Joanne D, you are a winner of a cruise for 2 to the Bahamas. All you have to do is pay the port tax, and I hope everybody enjoyed that. And as you can see here, again, my dog. Can you see her? Okay. She's just, relaxing, hanging out with her bone. Anyway, and you see how messy my office is, but that's I'm a busy person. Thank you for joining me. I'll have another video on Thursday. Check out stockdr.com. That's stockdr.com. We have a list of events coming up, so check out our events calendar. And as always, if we can help you, just notify us. We'd be glad to meet with you here in my office. As always, have a fantastic day.